What's up? Welcome to the Dan Dunn Show. So we're doing a pre-recording of Amazon's earnings. Tomorrow, Amazon's going to report after hours. So we have a whole trading day in between now and then. We have a whole lot to go over. We looked into this for a pretty amount of time. Substantial amount of time. We gave our opinion on Tesla. It turns out that we were pretty fucking right, down to the fucking T. So anyway, we're feeling a little cocky, feeling a little good about ourselves.
And we're taking on the big boy.
We're going for it.
Amazon's the big one. You know what I mean? Like this is when you think back on 2018, 2017, this bull run that we're on. I mean,
this was untouchable.
You're going to be thinking about Apple. You're going to be thinking about Boeing, Alphabet, and Amazon. And Alphabet reports smart too, but we only had time for one show today, so we picked Amazon. Let's just start off by saying what Amazon, in our opinion, needs to do to go up. Right? Let's just get right to the nitty-gritty. For Amazon to go up, they need good cash flow results as usual. Amazon's a company that believes in cash flow more than they believe in margin and profit. You'll see in their financial results that they listed number one. They always list it number one. Very important to them. The other thing that they're going to need is perfect U.S. sales, not average or slightly up. They need a perfect U.S. sales beat. And the AWS, Amazon Web Services, has become such the wild card and such the catalyst for Amazon growth over the last year. We'll get into that more. If Amazon Web Services is probably the most important thing of those three for continued growth in Amazon. Right?
I completely agree.
Yep.
Sat here with you, buddy.
So let's go look at last year's financial results, last quarter's financial results, so we can see what to expect this quarter. So you see here, this is their Q2. They go into a disclaimer, yada, yada, yada. This is the cash flow. So as you can see, last year, year over year, 9% up. For them to, what I would consider a good cash flow is if they can get another 9% jump right here. Your target number for that 9% is going to be 8,700. If they can post an 87 here, it will represent a 9% growth over this Q3 cash flow statement. And I think that would be, more than enough for them to say that there was a solid cash flow growth. They have some more cash flow here, but these are I would consider sub cash flows. I mean, this one went negative. Obviously, it needs to go positive. They cannot continue to post negative capital leases cash flows, but it was positive last quarter, and you would expect it to be positive this quarter as well. To me, that's too blaring of a weakness for them to ignore. They're going to fix that up. That's not going to be an issue, and it's the same thing with this one. There'll be growth here, but what you're really looking for is this 12-month trailing average cash flow. They need this thing to be 87 or better for them to consider it a good cash flow quarter. Let's go down to the monkey in the room here, sales. Sales and cash flow are the two things that are going to drive this company. I mean, let's be honest, Amazon is a retailer. They sell things. Web services is becoming much more important, and we'll see that later, but net sales is going to have to come up. Now, if you look at this chart right here, you see last quarter where their sales got broken down to. You got international, web services, and U.S. sales. I don't have faith in the international sales. You just look at the simple fact that the dollar has gotten stronger and has been on a bit of a bull run lately. You would expect that from last year's Q3 to this year's Q3 that international sales is going to drop. North America needs to outperform to cover for that drop. Let's go down. They have a chart down here by region. So here's their North American sales. You see 44% year over year between Q2 2017 and Q2 2018. I think because of the weakness in international sales that I would expect just from a macroeconomic perspective, they need that to go up at least 50%. They need their U.S. sales to really outperform here. A 50% increase over their Q3 is going to put them 3,800 this year in sales, which is going. They need to have a third quarter this year that was comparable to their fourth quarter last year. They need to beat this year their Christmas sales without Christmas being in this quarter. an extremely difficult task. They could do it though. Amazon is Amazon. If the consumer confidence was up, if everyone's humming and ordering,
discretionary has been up.
It is possible. It's not unobtainable. Needs to happen. If it doesn't happen, it's not going to go up. That U.S. sales needs to grow 50%. Now you see why here, how bad international is. I mean, we're not going to spend a lot of time on it because I don't think it matters too much. But you can see that, it's operating at a loss, $500 million loss. The sales are, 14,612 million, of course, but it's not a big part of their business. It's not a growth part of their business, and it's costing them a lot of money. They're going to have to address that, but it's not going to be a catalyst for this stock to move up and down. The catalyst for this stock to move up and down is this wild card here, Amazon Web Services. This is their business investment sector. So the North American sales I would consider retail. This is business investment, 110% business investment. Businesses using their web services, and you can see the tremendous growth, almost 50% between Q2 and Q2 2017 and Q2 2018. You're going to need to see very similar, if not better, Q3 results for this stock to run. It's going to be tough. If you think about web services, Dell entered it, IBM entered it, Microsoft entered it. All these companies are growing on. Microsoft is their big problem because a lot of businesses are already fully integrated with Microsoft, so it's a much more natural progression for the bigger companies to use Microsoft than it would be for them to have to install Amazon Web Services. But this is the growth here. This is the biggest thing, and the reason is their operating income. Look how this is 6.1 or 6,100, and this is 1,600. So their operating income here. Keep that in mind that for 6,000 in revenue, let's just say, they get 1,600 in operating income. For them to just beat that in North American sales, they needed to do $32,000 in sales or 32 million in sales or whatever that number pans out to be, 32 billion. So they really need that Amazon Web Services. This is the growth. This is where their margin is. This is where everyone thinks that the growth is. This is where they make their most money, and this is what has caused this stock to go up as much as it's gone up in the last 6 months. This is Amazon Web Services system needs to go up. There's no question that this needs to go up. So the rest of this, report, I mean, it goes into the numbers here, their cash flow. They think cash flow is king, and they're absolutely right about that. Amazon is a good company in the sense that it does, number one priority is to protect the cash flow, and it's hard to bet against a company that does that. They need sales. They need their U.S. sales to outperform 50%, and they need their web services. I mean, they really need this web services to increase. Now, what stinks about the web services, let's just transition back to us real quick. What's hard about the web services is that the GDP report doesn't come out till Friday, so you're not going to get business investment numbers until after they report. I don't know how they scheduled it or what their earnings was scheduled with the GDP report, if that was something that they thought about or not. But if this would be reporting Monday, there'd be a lot less risk involved in that because you would have a much better idea of what business investment actually was. So those are the financials. Those are the three things looking at their earnings report last quarter. So again, cash flow, always important when talking about Amazon because that's the measuring stick they use. Perfect U.S. sales to cover up the loss in international sales, and AWS needs to continue to grow at a 50% rate, if not better, to keep that operating income coming in, keep that operating income strong, and get that good margin. I mean, this company makes great margin on that. As it gets more, if it gets more competitive and they can't compete and get that same margin that they were getting before, they really will start to struggle.
Yeah, I completely agree. So another thing that we're going to be looking at here is the charts for Amazon. This guy's all about macro. I'm more about micro. I'm more of a chart reader, momentum swinger, and what I'm looking at here is a chart that has absolutely no strength. Now we're moving forward to a huge catalyst here, an earnings report, right? A big earnings report too. The whole market's been down lately. The last month and a half, really, it's been down. And if you look at this chart in particular, from the last time it hit a high over here, even over here you can say it hit a high. It's absolutely collapsed. There's no strength. There's nothing holding this chart. The volume isn't low or anything like that. The volume is actually kind of high for right now. We're heading into the earnings. People might want to start looking into taking profits. That might be what you saw here, but from what I've heard, from what I've seen, this has been an algorithm-driven market, and we are sitting right on Head and Shoulders. You know, the Head and Shoulders kind of went off, but technically Head and Shoulders don't get off till we go below the neckline, which would be right here, I guess. But the Head and Shoulders went off. We're heading into an earnings. AMD just had this happen. If anything bearish happens in this earnings, it's going to fall off the wall, and that's what we saw with AMD. This is what happens with these charts. It's algorithm driven. This is not some guy sitting in his desk with fucking 9 Bloomberg terminal windows up at him, deciding that he's going to hit sell here.
Yeah.
This is a goddamn computer this is goddamn computer driven.
And I'm not a chart guy at all. It looks like a bearish chart.
Dude, I mean, there's nothing bullish about that.
It doesn't look like a chart that I would buy with confidence if I didn't know anything inside, or if I,
especially with anything shaky on its earnings report.
Yeah.
So not only is it the worst point that this chart could possibly be sitting on, it's the worst point this chart could possibly be sitting on. It's also sitting on a bad catalyst. Yeah. If something goes wrong with this earnings report, then this is really what we're looking at here. And if the puzzle comes together, this is more or less what we're heading into.
Yeah.
So what
the classic
the classic bubble burst chart. So I've thought this for a while, but I never really had it in me to fucking go ahead and say this was the top, this was the top, this was the top. And I've kind of formed a new strategy to say that I wasn't going to guess the top. I'm just going to ride the wave down. So you can see clear as day, where the takeoff was, where the first sell-off bear trap was, and it's a good one. It falls right back onto that median line again. You got the media attention from it when the bull market really started taking off, right after Trump was elected. I guess it's 2017, but whatever.
Big market run in 2017.
Big market run. You had enthusiasm after
tax cuts, all that crap.
You had public, you had greed, you had the delusion, you had this chart could never stop going up time.
New patterns.
Yeah, exactly. That we're entering into a new kind of market here. Everything was going to be great. Everything was going to be free. Everything, we weren't going to have any interest rates. We weren't going to have any problems. Everything was just going to run up tenfold.
Picking yacht colors.
Dude. We were talking about Dow 50K in 3 years at one point in time.
Absolutely.
And dude, so you go back to this chart here. We had our first little bit of trouble. We got the classic Batman symbol, a Head and Shoulders formation. We have a dead cat bounce. We have it all. We just also seem to have an earnings report at what seems to be the perfect time too. If anything happens in this earnings report that isn't 100% to the bullish side, I fear that we're going to head right into this bull trap. We're going to head into the bull trap. It's going to be a denial kind of thing. We're going to come back up. It's going to be a return to normal. The market might recover a little bit. It can't go down 10% every day, right? Well, my fear is that maybe it will. Maybe it will, and maybe Amazon is going to be the thing that is just going to break that straw on the camel's back. And it's stuff like this that it's just scary, because you could literally chart out every single moment on the bubble burst chart on the way up. It's just the things on the bearish side haven't happened yet, but the bearish side happens so much faster than the bullish side.
That's correct.
And now is when you get prepared for that. And we just happen to have the biggest catalyst that the Amazon's going to have in the next fucking quarter.
Yeah.
And the market is going through it. We got the GDP, which hasn't been good, and we really could be sitting on a.
It's not promising. This chart's not a promising chart.
It doesn't have a lot of hope.
And really, it's going to come down to if they have a good earnings, then of course it's going to go up. So the question is, do you think it's going to have a good earnings? And for me, it really is. It hinges on that AWS, and I just don't know if they're going to have that same growth that I don't know what the market expects, but I don't. They need 50% growth in that market, and is business investment down? I mean, you got the tariffs. I know from working with companies around, there's not a lot of money to be investing in other things. Costs have gone up. They're talking about increasing pricing across the board. All the big companies are. So if they're increasing their pricing and they're trying to protect their margins, business investment is the first thing that's going to go. And so I'm not calling for a drop in AWS because it's like an annuity for these companies. They need to use the service to protect their data. But that doesn't mean that Amazon's necessarily going to be adding new data users. and that's where the growth was, and that's where the margin is, and so they might be able. I think that the cash flow is going to be fine. I think Jeff Bezos and Amazon knows about cash flow. I think that's going to be good. They might be able to squeeze out a 50% U.S. sales because consumer confidence and everybody's shopping still. Business investment, that's the most important one, and that's the biggest question mark, and that's why I'm a bear about this.
Yeah.
That's why I'm not going to. I'm not long Tesla going into these earnings. Amazon. Sorry, I'm so excited about the Tesla.
But yeah, to say whether or not I'm a bull or a bear, you have to look at a lot of things. Dude, Amazon brings in a lot of business. I buy from Amazon on a pretty regular basis.
Yeah.
But I feel like that I am priced in as a consumer.
Absolutely.
Unless I was buying thousands of dollars of merchandise on Amazon every single day, I am priced in.
Did you buy 50% more this year than you did last year?
No, I didn't.
I
bought a lot of stuff.
Actually, I probably bought less off of Amazon this year and more off of other websites. It's not that my spending went down. It's just that other websites are catching up. You know what I mean?
There are other things out there.
Yeah. The nice thing about Amazon is the free shipping, and it's always cheaper.
Yeah.
It is always cheaper.
And it's quick.
And it's quick.
Yeah.
Yeah, there's no question about it.
It always gets here.
But
this chart has no fucking strength.
But me and you are not what's going to drive Amazon this quarter. It's
absolutely
AWS.
not. Yeah,
it's AWS.
It doesn't matter what we did. But what couldn't happen is people like us stop buying Amazon completely. Yeah,
that would be
honestly, that might have happened because there's other things out there.
Yeah.
And dude, so you could see a little bit of a drop in people like us buying from Amazon, which would kill Amazon because they couldn't recover that anywhere else except for AWS.
Yeah.
And unless so then you're sitting on AWS doesn't need to make 50%, it needs to make 60%.
Yeah.
And you're just striving at new and bigger numbers that it gets to the point where it's just unfeasible.
And really, I'm not a chart guy. I mean, I'm really not the chart guy. I've never really sat there and looked at charts, but that's a bear chart. That is like a classic. You're in economics 101 and they're talking, some economics class and they're like, what were these?
About to make a move down.
This is 1927. What were these people thinking? You know what I mean? That's what that chart looks like to me, and dangerous.
Yeah,
it's dangerous.
We're sitting on the top too. I mean, we're still sitting on the top. We can't even. Could be completely wrong. Could come through and absolutely murder, smoke their fucking earnings tomorrow.
But you want to say the price target? You want to announce the price target?
I'll announce the price target.
Yeah, go for it.
Dude, I think Amazon's going to be at $1,400.
That's what he said.
In the short-term range. I think $1,400 is a price target for Amazon.
And you know what? So they're at $1,660. I think the probability of them getting to $1,400 is higher than the probability of them getting to $1,850 or $1,900 for sure. You know what I mean? I see more downside.
It's easier to go down than it is up, and there's a lot of downward momentum. There's a lot of downward trajectory here. Me personally, I wouldn't open up any kind of position in this on the bullish side. I definitely wouldn't open up a substantial one until I saw someone else do it. And the first guy that does it is going to lose all of his money.
Yeah,
it's tough. That's the way it's going to be.
It's tough.
So Amazon needs to check itself. I'm bearish on it. How do I think about these earnings? I don't think they're going to go well. I think that people like us are going to stop just a little bit, but they aren't going to get the growth that's going to let AWS.
Yeah, I think that's the biggest thing. I don't have the numbers on business investment. They don't come out until Friday. But my gut feeling is that business investment is not going to be up to the level that Amazon needs it to be up to meet their targets. And yeah, that's it. That's it.
We're bearish on Amazon. We think they're going to miss their earnings, at least not meet expectations. And I think a short-term range that I'd be looking at is 1,400 before you get any kind of return to normal on this bubble chart. If this bubble chart goes, you would get a comeback.
Pretty proud of this bubble chart. He did a good job on it, and it absolutely, when you look at the regular chart, it makes perfect sense. I mean, it drops, goes up to normal, drops down to here, and then right to there. I mean, that's
it would come out further on that. But
you're looking at this right here. That's what you're looking at. And
we're looking at a drop, and the Nasdaq was down. What was it? 4.5% today?
Something bad.
Yeah, 4.5%, 3.5% today. Something massive, and I think it was 4.5%. And shit.
So that's it. We are officially.
We're saying no. We're saying no.
Don't touch it. Sell it tomorrow before earnings. Just do what you gotta do.
Put it
Clutch your IV.
Yeah. Anyway, have a good time. Have a good day. Thank you for watching the Dan Dunn Show. We'll be making more of these. Hopefully we're right. You'll know if we're right.
Yep. I'll be on tomorrow afternoon talking about it.
I'll be on tomorrow day talking about it.
All right.
Have a good one, everybody.
Good night.